Hello everybody, I'm going to do an AMD walkthrough. I'm going to try to talk fast because I got a lot to cover here in this video and I want it to be under 10 minutes. And I don't know if it's gonna, but I'm going to try because I just drank one of these double shots from Starbucks. It's delicious. I'm hyped up. Let's go. Look, here's AMD. It's $81 a share. I usually wouldn't trade a stock like this, like swing trade, day trade, because I'm tying up a lot of money, you know? If I have a stock that's $4 a share, I can buy 1,000 shares of that, and then I can buy another $4 stock. I can buy another 1,000 shares with that same $8,000. If this stock has huge swings daily, right? If it has huge intraday volume where it's going up $7 and down $7, then absolutely it's worth potentially swing trading an $8,000 stock. But if you look, it goes up $2 or $3. I don't like the idea of tying up $8,000 to make 3%. When I could do much more with more affordable stocks. But I want to show you a couple things. First, we have this big sell-off right here in the morning. Now, I always say, well, let's wait a little bit for things to calm down, right? In the morning, we have a lot of stuff going on. We have the buyers coming in, we have the sellers coming in. It's volatile, stocks chop all over the place. First thing I notice is it is oversold. There's a lot of selling pressure here. It might reverse course and move back up. Might. There are no guarantees with this. The second thing I notice is this 200-day moving average right here. Traders use the 200-day moving average as potential support lines, but they also use them to indicate reversals in patterns. So if a stock has a strong bull run and then it crosses below like it's doing here, this is a potential sign that it could be reversing from a bull run to a bear run, and it might sell off. However, the fact that it's oversold here and starts to consolidate, maybe this is a support line. Maybe this isn't reason to concern yourself. But even still, if you were to buy this stock right here at around 81 and it just got halfway back up to 82 whatever, it's $100. It's a lot of money. I wouldn't be tying it up personally for a day trade, for a bounce play, something like this. Plus, it's only 10:30 in the morning. We got to see what's going to happen next. With this stock, it might reverse and it might sell back off. This could just be inexperienced traders coming in going, ooh, look, it leveled off. Let's buy here. It's like a fake out. And then it could reverse and just slump. So I'm not going to trade this stock. Let's jump further back because that's what I'm going to do right now. Let's go back 5 days. Take a look here. Okay, this seems promising to me. That it's oversold, and we have a breakout right here, even though it's kind of weak. I don't know if I would be trading based on this, but if you were one of those guys who trades when it enters oversold territory and you bought at 74, this seems promising, right? What did I say? When it crosses the 200-day moving average, it seems like a signal that it could be reversing from a sell-off to a bull run. And it does happen. Now, we didn't know this was going to happen. If you're watching right here and you see it cross the 200-day and you see it cross, it crosses all the good stuff. Crosses the 20-day, crosses the resistance line here on these Bollinger. Who's texting me? Go away. If it crosses this resistance line, crosses this 20-day moving average, crosses the 200-day, and has a breakout to the upside and another breakout to the upside, these are potentials as well for trades. Now, I know what you're going to say, but dude, look, it's overbought. Well, overbought doesn't always mean that it can't go higher. Now, if I were to have purchased it here and I'm looking at overbought, I'm thinking maybe I lock in my gains because you know me, if I have I make a lot of trades and my goal is to do $200 to maybe $300 per trade. If I'm talking quick, short-term stuff. If I'm talking swing trades, obviously, I'm going to try to make more than just $200. Usually, it's $700, $1,000-ish on a swing trade. If I bought this stock here, and the very next day, it was from 74 to 78, that's around $350, $400 if we're factoring in cents. I probably would have sold somewhere around here. If you wanted to hold this stock for a little bit longer, one option would be to use the 20-day moving average as a potential point where you consider selling. When it crosses, look, it's on the positive side of this 20-day moving average. That's a good indicator. When it starts to sell off and it crosses here, it's an indicator that it could be going lower. Because what's next? If it crosses this 20, it crosses this support line. And if it crosses this support line, it's a breakout to the downside, which could mean a reversal. We don't want that. So traders can use a variety of different methods to get out of a stock. One being, it's overbought, I'm going to sell at what I hope could be the top. Two could be, I'll wait for a reversal, and I'll consider selling here, or maybe I will sell here, or I'll consider selling here when it breaks out, or I'll just hold this stock and I'll wait for it to bounce off of a support line, whether it's, a moving average, a 50-day, or moving average 200, and we'll see. And if it breaks this, then I'll sell. But remember, if you're doing that, you're eating into your profits more and more and more and more. So for me, I would be in at 74, out at around 78 if I had traded. Inexperienced traders will wake up the following morning, see this, and the first thing they will say is, fuck! If I had kept this stock, I would have made maybe another $300 on my trade. I have to get back in. I have to make another $300. That's risky. You don't want to do that because you are abandoning your plan. You are abandoning logic and reasoning. You are not looking at the charts. You're not looking at anything. You're just being greedy. And that's why I always say, be a little less greedy than the other guy. Take your profit, move on. Okay, you missed out on another $300, but you made $400. So shut up, This is good, and this would be bad. Chasing this would be bad. It would be bad because you don't know what's going to happen. And look, we have a sell-off here. It could have broken, and it could have reversed course and dropped. And then you'd be eating into your gains from this, which you don't want to do. And a lot of new traders will go, well, I'm not going to take a loss now because I had a $300 or $400 profit, and I don't want to take a $200 loss because then I'll only have a $200 profit. So greed gets a lot of new traders in trouble. What would I have done? I would have said, oh, well, and then I would have just forgotten about it until it did something else, like hit a previous support line. Where do we find those support lines? We got to jump back a little bit further. So let's go skip the 10-day because 10-day, who cares? Let's go back to the 20-day. 20 days not looking that good either. I see a couple, so we always say you want it to hit a support line, a potential support line 3 times. If it doesn't hit that support line at least 3 times, you don't have a pattern and you're just guessing that this could be support, right? If it hits it once, it's not really a support line. If it hits twice, maybe it's a support line. We have to wait. Now we have a third. Oh, support line. So this could be a support line, but I want to go further back. Let's go back to the 180-day chart. Now we're talking support line. You can see it. And I am going to right-click, add drawing, and I'm going to drop a support line right here. Okay, so we've got a support line right here. I'm aware that I'm itching my nose a lot, and I'm very hyper, and I don't want people thinking I'm doing anything. I swear it's just this. The itching of the nose is allergies. I don't even drink, so, I'm boring. Look. Bounces off support, shoots up to the 87s. Bounces off support, shoots up to the 87s. Again here too. So we can right click and we can draw a resistance line. Come on. Does anyone else have this problem? Doesn't let you click? Okay, so we're gonna put one here, and you know what I'm gonna do is I'm gonna right click, edit properties, and I'm gonna change it to green. This is where I'm potentially gonna be selling. And this is another potential sell point up here in the 90s. So I'm going to do another one right here. Even though this it doesn't quite get, so I'm going to go a little higher. And I want to show you something else that's kind of cool. We're going to go here. We're going to drop it right. Actually, oops. You serious, man? I dropped it too low. I don't know if you know you can do this. If you right click, activate drawing, you can click and you can drag it up a little bit higher, then click on the screen and it'll fix. Again, we're going to right click. Why you are like this? Edit properties. Change to green. There you go. Now you might say, if I buy this stock at 73, why wouldn't I just hold out and wait for it to get to 99? Because you don't know that it's going to. It did it once, doesn't mean it'll do it again. It seems like a lot of the time it stops around 88. 88, 88, 88, 88. And then there's this brief period of time where it gets into the 90s. As a swing trader who's tying up $7,300 thereabouts, I'm going to be locking in my gains up here. The majority of them. I might, if I bought, say, 200 shares, hypothetically, I might keep 50 just for the hell of it to see what it does. But if it does start to reverse or it loses momentum, I'd sell those 50 shares. In fact, I probably wouldn't even hold out for this. I would be a little less greedy than the other guy. And I'd say, you know, if I got in at 73 and it got up to 88, let's do some math here. 88, 73, it's a $15 difference on my 100 shares. That's $1,500. Sorry, man, I'm taking it. I'm taking my $1,500 here. I don't even know if I would bother holding unless it looked promising based on some charts. The other thing that I notice here is it looks like it's losing steam, right? It rallies up to here. It rallies even higher. It rallies up to here. It rallies up to here. But look what starts happening. It hits the support line. Doesn't get as high, 84. Previously, it had been getting 88. Then look, we bounce again, and we get only halfway. This is telling me that we're having lower highs. Yeah, I don't know. Someone will correct me in the comments if I'm wrong. Lower highs. It looks like it's losing steam. So as a swing trade, what I would be doing is I'd be getting in somewhere around here, and I'd be selling somewhere up here. But now I see that it's kind of losing interest. Now, if it can have some strong volume to the upside and break this 200-day moving average, then things have changed and whatever. But it doesn't look like that's going to happen. It looks like it's going to be a resistance line here. This 200-day moving average could be resistance, right? Happens here, might happen down here, in which case this stock could be reversing course and heading lower. Someone asked me, hey, why don't you just set a limit order at 73? Well, you can, absolutely, but there's no guarantee that it will get to 73. So if you set your limit order at 73 here, it never gets there. It gets to 73.96. So if you set your limit order at a strict $73, because that's what it seems to be doing, around 73, and you work your full-time job and you come home and you see, oh, it touched and then it shot back up and you missed your chance to buy, and then look what happens over the next couple of weeks or days or whatever, it really runs. That's why I don't like setting limit orders and then just walking away. Here's what I do like doing. I like to right-click slightly, so the buy is 73. So let's go up to around, well, here's what we'll do. We're going to add a drawing, and we're going to say 75. And then I'm going to right-click on it, and I'm going to hit Create Alert with Drawing. And if it crosses below this line right here, I'm going to get an indicator on my phone. My phone's going to go buzz, buzz. Hey, you, go look at your Stark. Go look at your stock, because it's getting close now to what is a potential buying opportunity. I like this better than setting limit orders to buy a stock. This notifies you we're in that range now. It might not get to your target price of 73, right? It might hit oversold at 74, in which case, that's when you want to buy. That's when you want to buy. And that's why I don't like setting limit orders. I also don't like setting stop losses for that same reason, because it might hit your sell order, but when you come home and you look at the chart later, you see that it was just a blip. Oh, it hit oversold and then bounced right back up. Damn it, I got out when I probably shouldn't have. That's why setting these orders and then just kind of setting it and forgetting it and going about your day, not so great, because you might be missing out on opportunities, or you might be getting out of a stock when you really didn't need to be. Same works for setting sell orders, right? Sell, when it gets to 88, just sell it, give me my profit. But what if it's having a strong upswing and you get out too soon, and having looked at the chart, you would have made a decision going, you know what, I'm not selling yet. I'm going to move my sell order a little bit higher because we're having a surge in volume. So you can, I prefer to set these alerts slightly above my goals or slightly below my sell order, so I can come and I can actually look at the stock in real time and then make a decision, instead of just getting stopped out or having my position sell and take my profit when there's more room to grow. Last thing I want to do is I want to go back to the 1 year chart, because this scares me. If we can break this support line, so I'm going to get rid of this because this was our alert. This was our line saying alert me that it's getting close for buying. If we break this support line, this is where we could go. So we'll add drawing, and we'll put it right here at its previous support of 49. If we break this, that's why it's important to have a plan to sell as well. Where will you exit the stock? 3%, 5%, 7%, 10%? Because I guarantee you would rather get out of the stock at 7% loss than hold all the way down to a 30% loss and then not sell, because you're not going to take a 30% loss. You're just not going to do it. On 100 shares, that would be around $3,000. You know, I think that's the correct math. You don't want to do that. You would rather get out here. And what I also see is earnings. Earnings are out on the 27th, which is this month. I don't know if I'd be trading the stock right now. Now, what we see is the Bollinger Bands narrow, which is good. When you see the Bollinger Bands narrowing together, it means that a breakout is more likely and could be significant, but it could also be significant to the upside or the downside, depending. So you don't know that it's going to have this big surge, but look what happens when it does. And it's right around earnings. If we can get some consolidation and the Bollinger Bands can narrow, they're still kind of far apart right now. If they can narrow, the trading range narrows, right? It bounces in between a tighter range. See here, 49 to 56. But if you look at this trading range, it's 73 to 87. Much bigger trading range, which means potentially much more room for pain. If you were to buy up here, you'd be riding it all the way down to here. That could be a big loss. And then if it breaks the support line and goes even lower, and you haven't gotten out, you're in big trouble. Whoa. I have not been inactive for a while. Why did it do that? What a dick. That's why it's important to have plans, okay? I don't know. So if these Bollinger Bands can narrow, usually it's a good sign that there could be some volatility coming, but it could be a bad sign too, right? It could be a breakout to the downside, which we don't want. And the fact that earnings are coming out next week or in the next couple of weeks makes me hesitant about trading the stock right now. After earnings, potentially. But if you were to buy it going, I hope it has good earnings, and you were right, you weren't a genius. You just guessed correctly. You could also guess incorrectly and look where it could go. So I don't trade into earnings because you really are just gambling at that point. So I'm going to leave it there. I hope you hope this video was helpful. I hope you thought this video was helpful. Thanks for watching. Please hit the bell to subscribe if you haven't already, and have a good day.